I often get asked, what's the harm in selling everything and just staying in cash? Let's figure it out, wait till the world calms down and see what happens. In theory, this sounds like a great strategy. Just be calm, just wait till everything handles itself. The issue is in the execution. And I'll go over the reasons why. Being in cash, we're gonna miss big days in the market. You see this chart here, it shows the top 10 days in the market since I've been in the investment industry in 2005. And so we risk missing one of these big days. And as you can see, some of them are 10%. And if we miss a 10% day, that is more than a year's worth of average return. And so that really hurts our long-term performance. We miss a few of them, who knows? And oftentimes these big events happen unexpectedly. So in 2025, tariff relief, bam, 9.5% jump up in the market. It was so scary for people to be investing during that time. But once that happened, things took off. If you're in cash, you missed that. And you weren't probably gonna get back in the market. It was the start of a bull market. And if you look at points from that past chart there, number 3, number 4, number 6, and 7 were basically the start of a bull market. The market took off over 20% after those events or through those events. And so we're in cash, we would have missed that. We just don't know when these big days are gonna happen, and sitting on the sidelines, the news is often the worst when these big events are happening and they're gonna come. So some of the events were happening when the market was going downwards and they're there, but I just say, I really just believe being invested in the market. So point number 2, being in cash is a very difficult place to be. So if you've sold all your investments because you believe the market's going down, it's probably after a period where the market's dropped some. So you missed out, you already had your investments go down a bit, you went to cash, and then when do you re-enter? And oh man, that is such a difficult decision, because if the market goes up, you're like, well, I'm gonna wait for it to go down. If it goes down, you're like, I don't wanna catch a falling knife. And it's this mind game that we end up playing, and it's so hard. What's probably gonna end up happening is you're gonna buy back in at a higher price and then put yourself through all that stress. And then also when you're in cash, you don't really make anything. And people say, oh, let's put it in a GIC. Well, GICs only come due once a year. Telling me a year from now, the market's gonna be lower. Those odds are so low. And so I just don't think it's a good idea. You have to be right twice. You have to be right on the sell and you gotta be right on the buy. Most investors in the world aren't that good. Really great investors also thinks in terms of decades, not days. We're not speculating, hey, there's gonna be a market drop. We're investing for the long term. I often say too, if you're in cash, would you feel comfortable investing when every fiber of your being was saying stay away because the market's been down, it's scary out there? No, but if you're already invested, you're like, okay, I'll hold on to these. And so that's kind of the thing you have to go. Point number 3, you get paid to endure hard times. And it's easy to invest when things are going up. But when the market's going down, you got some bad statements. Yes, it is tough to invest, but that's when you get paid. That's what makes us investors. Sticking to a plan when the world is falling apart and things are bad out there, it's tough, but it's what creates long-term wealth. If we diversify, which I do, and so we don't have all our eggs in one basket, we're not putting in one stock, one area, we're gonna have a balanced portfolio, that will protect you as well. Please let me know your thoughts.